Everyone's focused on the 25 basis point rate cut tomorrow. But that's the least interesting part about this upcoming Fed meeting. Powell will come on tomorrow and say the following. Good afternoon. Today the committee decided to lower the target range for the federal funds rate by 25 basis points. Recent data suggests the labor market has cooled further, with slower job gains and a rise in unemployment. Inflation has moderated somewhat, but remains above our longer run goal of 2%. Monetary policy remains restrictive and continues to weigh on demand in the labor market, helping to bring inflation back to our objective. Future policy decisions will depend on the totality of incoming data, the evolving outlook, and the balance of risks. We remain strongly committed to returning inflation to 2% and will maintain a sufficiently restrictive stance until we are confident that inflation is moving sustainably lower. With some key government data temporarily unavailable, the committee's assessment relies on private and market indicators, which continue to point to a cooling economy and moderating inflation. So, what does this mean? The rate cut itself is already priced in. Everyone expects it. What really moves markets tomorrow is two things: Powell's tone and what he says about QT, quantitative tightening. First, listen how he describes policy. If he says policy remains restrictive, that's hawkish. It means the Fed still sees rates as high enough to slow the economy and cool inflation. But if he hints policy is moving closer to neutral, that's a quiet signal more rate cuts could follow. That one word, neutral, can flip the entire market tone from cautious to risk on. Second, QT or quantitative tightening. That's when the Fed shrinks its balance sheet, letting bonds mature without replacing them, basically draining money from the system. Powell's already hinted that QT could end in the coming months. If he confirms that, liquidity improves, yields drop, and risk assets get a tailwind. If he avoids it, liquidity stays tight, and any market rally again fades into market close. So the real story isn't the 25 basis points cut. It's either Powell quietly opens the door to easier liquidity and a softer stance on policy. That's what will shape markets for the rest of the year and early 2026. Stay informed, guys. Give me a follow.